Morning, everybody. It is Ruthie Rocks, and I'm so happy to be back. Hopefully, you're having a wonderful June, the 5th day of June already. We're going to go right into the Las Vegas market stats this morning. Another day in paradise here. And we have 44 days of inventory. So, what has happened? We were up at 50, now we're down at 44. Well, because in May, y'all sold 102 homes a day. So, I based the inventory on the number of homes that you sold in May based on the number of homes we have available. So that gives us 44 days of inventory. And as you might suspect, as the inventory days go down, those prices jump back up. And I did a stat research this morning, and it looks like right now the median price single family home is $450,000. And people say, what does median mean? Well, if you have 2 dimes and a nickel in your pocket, right? A dime, and a nickel. Well, the one in the middle is the median. But if you have a dime, a nickel, and a dime, the one in the middle, the nickel, is the median. So the median is to me, I know average isn't the way to go either, because we've got I think the cheapest home I found was $85,000. And then the most expensive home was up in the millions, I think 30 million. So to really find that sweet spot, I don't know how applied analysis does it, but what I did is I downloaded all of the available homes, all of the sold homes. I'm going to try to see what their formula is. I know I could probably call Andrew Smith and he would tell me, but I wanted to kind of figure it out for myself. But anyway, the market says right now it's $450,000. MLS says that the median price home right now, June the 5th, is $450,000. So that means we have 74 homes over the weekend that we just listed in that price range, 0 to 450. And we have 1,050 available homes from 0 to 450,000. Again, the cheapest one I found was 85,000 in that range. And that's 31% of our market. So that's good. I mean, we were down at 25% just 2 weeks ago, May 19th, I believe. I looked at the stat. And the good news is y'all are selling homes. Now, last year you were doing 126 in May, but last year, as we know, was a crazy market. If you look at all of last year, the daily average sales was 131, not daily average, but the daily sales was 131 sales per day. This year, we're doing 88 sales per day, and that is between January and June the 5th. However, May is up at 102, and already we have recorded, and I guess Friday must have been a recording day, 256 homes. And now I'm sure some of that was from May, but anyway, I think we're going to have an outstanding June. It looks like the market is very active, and it has picked up quite a bit. Now, the investors, they've slowed down a little bit, down to 23 homes per day. And I think in June, May 19th, I think they were about 19. So about 22. So they're right in that range of using about 25% of our daily sales. That's good. They're the cash buyers, right? They're usually the cash buyers. So if you can glean anything from that, not everybody is paying cash. It's interesting how many people pay cash, but 25% of our daily sales are non-owner occupied, and most of those are cash. The $1 million homes, they crept up past that 3.5 per day mark up to 3.7 sales per day. And there's $734 million plus homes on the market. And they are phenomenal, beautiful homes. Let's see, what else can we glean from our stats today? Let's put this down and let's move on here to what this means when we go up to a higher median. I kept 440 just to be a little bit conservative. We'll see how it all plays out once applied analysis does their magic. But I did 440, and as you will see here, let me put this over here. Got all these new boxes they let me use. I mean, even if they bought last year with the median price of 427, I know it was higher at one point, but the median for the year, they have equity. Now they don't have enough probably to sell that home without going under, right? We're looking at probably 2020 before, if they bought it for the median price back then, 345, they can glean about 95,000 of gain. And of course, that depends on their mortgage, depends on how much they're going to sell it for, so on and so forth. So lots of different factors here. But the good news is that you don't see any negatives here.